Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. All right, let's get to the political story that is of the day. That would be the fourth criminal indictment of former President Donald Trump. Want to bring in Kailey Leinz, Bloomberg Television, TV and Radio host. She joins us here. Plus, former federal prosecutor for the Department of Justice, Michael Zeldin, joins us as well, so we appreciate that. Kailey, let's start with you here. What's the feeling in D.C. about this fourth indictment and likely, presumably, the last one we'll get here?
Well, we've all been waiting a really long time for this. It had been some time that Fani Willis, the district attorney in Fulton County, had said that she would bring these charges in August. So there is some relief, I guess, that has finally happened, and we all have to stop the waiting game. And now it really is more of the what happens next game. That said, this is, as you say, the fourth indictment. We have already seen this song and dance 3 times already. So I feel like there is a bit more of it's another one sense here relative to, the history being made of that first state indictment in New York and then the first federal indictment in the classified documents case. And so the fourth one, while definitely significant, given its wide range, how the violation of the RICO Act he is accused of does carry a minimum sentence if found guilty of 5 years. It definitely is significant, but it's a moment we have long been expecting.
Michael, first of all, thanks for joining us. I got to ask you about the tactical differences between the Jack Smith prosecution of just Trump and, it seems like he's really honed in. He doesn't want to be distracted by any other defendants. And Fani Willis, who has, how many people has she indicted?
41 million.
18 people.
19, okay.
19 people. 19 people. It seems like that would just take a long time. Everybody's got a different scheduling problem. I mean, how is this going to work out?
Well, a whole lot of people are going to enter pleas. All of the people on sort of page 2 of the indictment, they have to get out from under the RICO charge. RICO charge carries a 5-year mandatory minimum, and these lesser people are all going to say to the prosecutor, please let me plead guilty to something other than RICO. If you need me to cooperate, let's see if I have anything that's worthwhile to you. But this case, I think, is going to get skinnied down pretty quickly because of the RICO charge. And I think you'll have a multiple defendant case. But Fani Willis decided that that was what she wanted to tell the jury, this multi-part, multi-purpose indictment with a lot of people trying to undermine the voters' rights in Georgia, and that's her prerogative. It's a sovereign state, and that's what she chose to do. I don't know what the timing will be in relationship to Jack Smith case, and I don't know how it'll work with some of the overlapping witnesses, but that's for them to work out between them.
Hey, Kailey, the Biden administration has been noticeably quiet during the prior 3 indictments and just kind of during the whole process here. Is there any reason to think that will be different here, or now that we've kind of got the final one, maybe they'll have a holistic kind of comment?
Well, certainly this isn't going to be an issue that the administration, or more specifically the Biden campaign, is going to be able to avoid, especially in the general election, should, as is presumed now, Donald Trump be the Republican nominee. They are going to have to deal with this litany of legal issues and address them and make the case why, Biden would be a better president than Trump, in part for those reasons. That said, given perception on the side of many in the Republican Party that this Justice Department under President Biden is being weaponized against the former president, I think the administration is being very careful here to not comment for concern about how that may be perceived and feed into that notion that this is politically motivated, as the former president himself and others close to him have suggested that all of these indictments are.
And Michael, I just want to get your thoughts here. Now that we have 4 of these indictments, could you help us just put it all in context? Where is the real risk here for former President
By the way, I got to say just quickly, Paul, it's a strong presumption that this is the last indictment Donald Trump faces.
That's a fair statement. Of we currently know, I guess, is probably the way to phrase it. So, Michael, how do you put him in? Where's the real risk here for the president?
I think they all present different risks. If you were going to say which is the most serious, which is the least serious, perhaps Georgia is the most serious because of the mandatory minimum. But each of these cases is an important case for the president, former president. Each has the opportunity for him to come forward and testify and say why this isn't true. We'll see whether he chooses to testify in any of these cases. So I think, it's hard to sort of guess which one is the most significant, because they're all significant. All of them are felony, indictments, and all of them carry jail time. This one just carries mandatory jail time, which is why I'm putting it at the top of the list. But it's very hard to handicap them in that way because they all have different issues and present different opportunities for Trump and opportunities for the prosecutors.
Michael, I want to ask about not the former president's indictment issues, but the current president's son. Hunter Biden was assigned, the probe of Hunter Biden, a special counsel. And what difference does it make? I mean, this investigation has already been going on for 5 years by a Trump appointee. How do you see the difference here as a special counsel?
I think it's really more form over substance. I think that because the plea deal broke down, and therefore because the case is ongoing, and because there are possible Foreign Agent Registration Act links that at least the politicians have been saying take us back to President Biden when he was vice president, that Garland just made a safe decision to say, let's just designate him as a special counsel and strip the politics of this even further. But I think it's really more form over substance. Weiss is the guy who's been investigating this for all these years. He's the special counsel. And I think business will go on as usual, except, of course, nothing is usual in this case.
Kailey, just following up from the Washington perspective here as it relates to Hunter Biden and his legal issues, what are we hearing from the Biden administration, the Biden campaign, as to the risk here?
Basically nothing at all, to be honest with you, Paul. This is an issue that President Biden is very reluctant to touch. He actually didn't even say anything about it on Friday when the special counsel was named. To this extent, when we heard the plea deal first announced, that of course has subsequently fallen apart earlier this summer, all the president and the first lady said in a statement was that they love their son and they support him as he continues to rebuild his life. This is a very touchy subject for the president in regard to his son. Again, like Trump's legal issues, this isn't going to be something as he campaigns for re-election in 2024 that he is going to be able to avoid forever. This is something that is going to continually be a focus on him and his family, especially not just in terms of this probe that is happening with the special counsel, but also in Congress where they're investigating, to use the words of the chair of the Oversight Committee, James Comer, the Biden crime family. It's something that's going to continue to dog him, but it's something to this point he has proven very reluctant to actually openly talk about.
Yeah. Michael, the former President Trump now faces 4 criminal indictments. Who is representing him, and is he getting, quality representation?
Well, this newest lawyer, Lauro, is reputed to be a very good lawyer. I have friends who know him up from Florida, and I think he will do a good job for the president if the president does a good job for him as a client. Right now, the biggest problem with Donald Trump from a lawyer's perspective is containing him. He was just in court the other day, and Judge Chutkan in the D.C. District Court in the January 6th styled case said to Trump, here are the parameters of what you can and can't talk about. We're not going to try this case in the public domain. Does everyone understand what's going on here? Everyone, yes, agrees. Lauro says, yes, on behalf of my client. He understands the protective order. The next day, he violates the protective order. So we're going to have to see how Lauro can control his client. We're going to have to see how Judge Chutkan, if he can't get under control, sanctions the behavior of the president. So he's got good lawyers. He's just not a good client. And, good lawyers can only do so much with a bad client.
All right, Michael, thank you so much for joining us. Really appreciate getting your informed perspective. Michael Zeldin, former federal prosecutor for the U.S. Department of Justice, and Kailey Leinz, Bloomberg Radio and Television, joining us from Washington, D.C., giving us their perspective there as well. So, again, the fourth indictment of former President Donald Trump, that's now been released, and now I guess it's a political issue as well as a legal issue. So we'll stay on top of that, of course.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
I'm looking at Home Depot. The stock is up at 1%. They reported some results that beat estimates. Apparently, the do-it-yourselfers out there are still spending. I don't relate to that whatsoever, but I do have a toolbox in my house, but that doesn't get a lot of use.
I have so many tools.
You do?
But I don't really do that much with them.
I'm not your guy for that. But Drew Redding he's a research analyst. He covers all the home builders for Bloomberg Intelligence here. So, Drew, it looks like, people went crazy during the pandemic, buying stuff and fixing up their houses, and I thought we'd see a big drop-off post-pandemic. Doesn't appear that that's happening.
Yeah, it's right. Home Depot is still going to do somewhere around $150 billion in sales for the year. That's up more than 40% since 2019. But we are seeing a slowdown this year. The company called out ongoing pressure in bigger ticket discretionary items. Part of that has to do with the inflation we've seen. Part of it has to do with the pull forward of demand over the last couple of years. So think of certain categories like patios or grills or appliances where you make that purchase 1 year, it's going to be a while before you purchase it again. So that's part of the slowdown. They have noted a little bit of strength in smaller tickets, which has helped to offset some of that weakness. But generally speaking, the company still expects sales to be down 2 to 5% this year.
How are they doing in terms of competition, Drew? Are they winning the fight with Lowe's, or does it really just come down to whoever has the store nearest you gets your business?
I think that's part of it. And Home Depot's massive store footprint has always been a competitive advantage for them. One of the reasons why we like them and why they've been winning over the last couple of years is because their exposure to professional customers. It's about 45% of sales. It's about 25% for Lowe's. So the pros, while their backlogs are starting to slow a little bit, they're still very elevated from where they were over the last couple of years. And, as we look forward, they're starting to dive deeper into the pro category through what they call complex projects. So you think of a contractor who has relationships with, many suppliers, whether it's for paint, flooring, you name it. And, they have to go to 10 different suppliers. Home Depot wants to consolidate all that and be the single supplier for larger contractors taking on more complex jobs. And we think that's a big growth opportunity for them.
So when I walk into a Home Depot, which granted isn't very often, but when I do walk in there, I'm just blown away by all of the inventory they have there, the SKUs, as you retailer call it. How are they managing inventory? Are they like a lot of other retailers where they had too much inventory there coming out of the pandemic?
Yeah, they've really worked their inventory levels down very significantly. They've highlighted they still have a little bit of more work to do, but at the same time, what they've done is they've improved their in-stock position, which has been a focal point for them. So their in-stocks are actually better than where they were over the last couple of years. So that's really, what they're focused on, and they've made good headway in that regard.
I was in there on Sunday.
No.
We have a big Home Depot out in Yonkers. I was looking for a 1/8 inch BSP pipe cap.
No, you weren't.
Yes, I was.
Wow.
Because I blew the O2 sensor bung off the exhaust pipe of my Ducati Monster.
Sure, I hate when that happens.
And I was looking for some high heat Loctite. Now they had the pipe cap, which I was impressed by. In fact, I looked first online and saw they had 10 in store, and I was like, wow, they never have it in store. But the Loctite they didn't have.
What are you going to do?
So Sunday, dealership closed. Monday, dealership closed. Motorcycle dealers always close Sunday and Monday. Today,
I'm going to go get it fixed.
That's right. Yeah.
Hey, Drew, talk to us about the housing market in general here. We've got interest rates, mortgage rates, north of 7%. nobody wants to get out of their house with their 3% mortgage and try to move to somewhere else with a higher mortgage. Is there a level that you hear from maybe some of your home builders where they think if the mortgages get down to some level, is it 5%, is it 4.5%, then that'll free up the market? Where are
This
we?
is Paul hoping that mortgage rates come down next year because he
exactly.
has an adjustable rate mortgage that he wants to refinance.
Yes.
It's a great question. We've been describing the housing market as a tale of two markets. You've got activity in the existing home market pretty much frozen because, as you mentioned, people don't want to trade in their sub 3.5% rate for what's now 7.25%. On the other side, you've got the builders who have benefited because they've brought new supply to the market. They've been able to work with their buyers through offering lower mortgage rates. And to your question, what we've heard from a majority of the builders is that 5.5% mortgage rate is kind of the sweet spot where they've seen much more buyer activity. But, I will say that we've also heard as rates have started to creep up, not all of their buyers are using rate buy downs. Even from some of the larger builders like a D.R. Horton, you're somewhere around 60%. So there is some aspect that consumers have become more comfortable with higher rates. I mean, we've been at these elevated levels for, call it more than a year. So there has been kind of some degree of acceptance here among consumers. And, what they've had to do is kind of just adjust their expectations. Builders are also adjusting the size of their houses. That's another way that they could get to that monthly mortgage payment.
I wonder about the labor situation right now. Did we learn anything from Home Depot about that? Because I noticed on Sunday when I was in there, they had a lot of employees. Like I was always able to get help in every aisle when I needed it, which is not my typical retail experience over the past year.
So actually, believe it or not, Home Depot has made this year a massive investment in its employees for its hourly employees in the stores. Their model tends to flex with demand. So you'll see their staffing levels within their store adjust as demand ebbs and flows. But they have made that a concerted effort in investing in their employees because, the labor environment has been so tough over the last couple of years. We think that this is, it's the time to do it. While the market might not be as strong as it's been, now's a good time for them to get out ahead of it. So when things do rebound, they have the employees there.
So, when you think about building new homes, it doesn't seem like the builders are building what the market really needs. The market needs starter homes for people. Do we need another McMansion or subdivision of McMansions with the 5 and 6 bedrooms? Now, I understand that's where the profit margin is for the builders, but I'm wondering, is there any supply to meet that demand on the lower end?
So that's actually been an area of focus for the builders over the last couple of years. You've got names like D.R. Horton, Lennar, who are pretty big in the entry-level market. We think that's where most of the supply is going to come because that's really one of the only ways at this point where you could kind of help to bridge that affordability gap. You're seeing builders start to offer lower square footage plans that are more preferred by buyers. They're starting to take out some of the bells and whistles in the houses as well, which helps to lower that payment too.
What are the next data points, Drew, that you're going to be watching closely in terms of the housing market and, which direction to decide which direction we're moving here?
So it's going to be interesting to hear the next round of home builder earnings calls to see how this, resurgence in rates to 7.25% is going to impact the business. We just got data from the NAHB today, builder sentiment, and it's actually the first decline in several months. And a lot of that has to do with the fact that rates have risen so much. So buyer traffic is down. So if this situation persists, we would expect that builders are going to return to a more elevated use of sales incentives to drive traffic, which could impact profitability. So that's really what we're going to be listening to. How has this most recent rise in rates impacted the business?
It's pretty amazing. I look at the bank rate, 30-year mortgage, and right now 7.51%.
Yeah, brutal.
Ouch.
Yes. So I thought I was getting rooked with my 6 handle, but I look kind of smart these days. Drew Redding, research analyst, covers all the home builders for Bloomberg Intelligence. Appreciate that. getting that update on Home Depot.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Amol Dhargalkar joins us. He's global head of corporates for Chatham Financial. He's been doing this stuff for over 20 years. He's got his MBA from some trade school down in Philadelphia. But certainly the key part of his resume for me is he's a Penn State graduate, chemical engineering and economics. Penn State, by the way, the football team is preseason ranked number 7, which is great to see. Although I think it might be a little high. But anyway, Amol, thanks so much for joining us here.
That is so uncool.
Well, I'm a huge Penn State fan, but I just feel like 7 might be a little high.
That's
Hopefully
too much.
They can earn their way into it. But
Amol, what do you say? Does 7 sound good?
We don't have enough time to talk about Penn State football. I think 7 sounds pretty good to start.
That sounds pretty good to start. All right, Amol, what are you looking at here? Again, I'm looking at the real yield on the 10-year. Some people like Lisa Bromwitz tell me that's important. We're here at 1.83. That's the highest it's been since, I think, like 2009 or something. So what do you make out there in the marketplace?
Well, nominal yields are pretty high too. And what we have seen is there's just been this adjustment in the market to coming around to the view that rates might be higher for longer. I mean, we saw the retail sales data out this morning that was quite strong. And again, the market is slowly adjusting, and multinational corporate CFOs, treasurers are starting to really try to understand what that means for them as they look forward.
So is your sense that we are, in fact, in for kind of a soft landing, that maybe the Federal Reserve has kind of done a pretty decent job here?
Well, that's what the markets seem to be feeling right now. Remember all that talk of the Goldilocks ending to this inflation story a year or so ago. There was a lot of naysayers on that. And right now, the markets seem to be adjusting to the possibility that the Fed has, in fact, stuck the landing. There's a lot of room to go here. And again, I think one of the big challenges for risk managers out there, for CFOs and treasurers, is looking at that and saying, well, what does this mean? I have certainly a significant amount of maturity coming up. When you look at both investment grade and high yield bonds, how should we finance ourselves in a very different market environment than any of us have seen in over 2 decades?
In a much more expensive way, I'm guessing, right? I mean, if you're financing a deal now, or if you're refinancing existing debt, you're going to just be prepared to pay more.
That's right. It's not just home mortgages that are north of 7 anymore. And everything has gotten a lot more expensive. And so it's led to what we often see in financial markets is lots of innovation. One of the biggest areas of innovation we've seen is the growth of private capital. So not necessarily bank lending, but now we have all these funds out there, as you've probably reported on many times, that's creating new sources of liquidity for a lot of mid-market and even large cap type of firms or infrastructure projects. It's been a pretty dynamic change in the lending environment that we've seen amongst our clients.
And I mean, we're expecting that to continue to grow, right? The private capital, private lending is a business that just keeps getting bigger.
Absolutely. It keeps getting bigger, and it will be really interesting to see what happens once banks resume, as firms start to really underwrite that, there's a bit of a recession that could come, but maybe it's not going to be too strong of one. Banks come back into the market. There's a lot of competition from private capital. You wonder how quickly the credit cycle can turn, and whether institutions are going to be able to refinance into maybe not better rates, but possibly better terms than they could otherwise get.
Hey, Mal, I mean, if I were to come back and restart my career on Wall Street, I would definitely look at the private credit business, because it just seems to be such a fast-growing part of the marketplace. But Jamie Dimon and others have called out, hey, but these guys are kind of like a shadow banking system. They're not really regulated, and man, there could be some real problems there. Are you concerned about that, about kind of how much capital is going to the private credit market?
I think the private credit itself is just a continuation of a trend that we've seen in finance over many, many decades. That is, there are places where there are different institutions that are better poised to offer liquidity for different firms. As we look forward, though, there are going to be some challenges for private credits. They don't offer the full services that banks do. At Chatham, we work in the debt and derivative space, and one of the places that a lot of borrowers get into some challenges with private credit is they might be able to borrow on a floating rate basis from private capital, private debt funds, but they may not be able to actually hedge their risk as effectively as they could if they did borrow from a bank or a syndicate of banks. And so, especially in a rising rate environment, that can create some incremental friction, some incremental costs, or some incremental risk that firms don't really want to take on.
So, Amol, I know you guys at Chatham, you talk to a lot of the largest corporations in the world and about their hedging programs. What kind of hedging programs are you focused on, or are you hearing from your clients that they need expertise on? Is it interest rates? Is it currencies? Is it commodities, or some combination?
It's all three of those, actually. And one of the biggest areas, of course, for the last year has been around interest rate risk management. Lots in the news. But if we rewind to about a year ago, you might recall that FX was pretty big in the news. The euro was below parity around this time last year. Sterling, they were going through a run of prime ministers very quickly. That was making its way towards parity. Since then, the dollar has weakened, which has led to a little bit of complacency amongst very large cap and multinationals. But there are some other interesting areas to look at as well. Probably the other big theme that we've seen from these multinationals is looking for places where they can reduce their cost of funds. So back to higher interest rates in the U.S., there are other places around the globe that are actually cutting interest rates. China, as we all saw this morning, is one of them. And that's leading to some interesting opportunities for firms to do some arbitrage, for lack of a better term, between dollar funding and could be funding in other currencies.
Amol, let me just finally ask you what you like in corporate credit. Are there areas that you and Chatham find attractive right now?
We're not too focused on the credit cycle at this time. I think one of the big questions that investors are asking is how are these firms actually managing their risks, especially as we go into the possibility of some type of a downturn. We recently did a study, and we found that an interesting fact is that newly public companies tend to manage their risk less proactively than firms that have been public for a longer period of time. And I think that's an interesting area that investors are going to be paying more and more attention to as we go forward.
All right, Amol, thanks so much for joining us. Really appreciate getting some of your time. Amol Dhargalkar, Global Head of Corporates for Chatham Financial.
You're listening to The Tape, Kantar Live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeart Radio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
All right, let's talk rates here and what the Fed's going to do. We had some strong economic data this morning. Retail sales came in gangbusters. How about that? Let's bring in a couple of smart people and we'll round table this whole thing. Michael Schumacher, Head of Macro Strategy and Rates at Wells Fargo, and Neil Grossman, co-founder of TKNG Capital. He joins us in the studio. Michael's via Zoom. Michael, let's start with you here. What are you telling the good clients of Wells Fargo about kind of where this Fed's going to go, where rates are going to go, how high are they going to stay here? What's your call out of Wells Fargo these days?
Yeah, as far as the Fed goes, I think where most people begin is, hey, is the Fed done or not? And it's probably close, maybe done. That's the call from our econ team. Possibly goes one more time. Either way, neither one's a surprise. I think the bigger question is how long does the Fed keep policy quite tight? And that could be in a pretty extended period here. Nonetheless, when you put these things together, we do recommend the clients scale in and buy bonds right now. You might say, well, it sounds kind of odd given the backdrop with Fed policy rates staying high. But the reason we have this view is that the markets typically don't believe what the Fed is trying to sell. So Jay Powell almost certainly comes out of Jackson Hole, says we'll be on hold for a long time. But if people get the sense the last hike is in, they'll be racing to buy bonds in our view. So we do think the yields come down a fair bit by the end of the year. We've got the 10-year Treasury sub 350 at year end. So maybe it's the peak, maybe it's not in yields, but it's time to scale in.
But in terms of, Michael, the Fed funds rate, Jerome Powell is saying it's going to be years at these levels. At the same time, he gives us a dot plot that shows cuts 4 of them next year, and then even more the following year. How do you square that circle?
Basically, you don't. So Jay Powell is going to say, hey, the dots are not forecasts, they're individual members, something or others, but you can't really account for the difference between Powell's view and the dots. So really what the market folks typically do is discount a lot of the dots and try to latch on to commentary from Powell, from Williams, from a couple other senior folks, and really let that be the North Star. But the dots themselves don't really jive with what the Fed's been saying, at least the senior leadership.
Neil, what do you kind of make of what's happening out there? You look at the markets, you look at kind of some of the eco data we're seeing. What's your story these days?
I think my story is consistent with what we discussed. Number one, I think for the moment you've seen the best of the inflation data. The rather sharp drop was due primarily to year-on-year comparisons, but over the next 6 months, those comparisons turn around. I think the last half of last year averaged like about 0 to 0.1. So the odds are you're going to start to see, number one, prices push higher, which should work against the Fed's or the market's perceived perspective of the Fed cutting, number one. Number two, these labor agreements are telling you there's a lot of upward pressure on wages. And yes, if productivity is sufficient, that's one thing, but it's still embedding a lot of upward pressure on prices. Number three, again, I know the Fed has a habit of speaking one way when it means being accommodating and going the other when it's not, but they spent years talking about averaging. Well, by the end of this year, you'll have had 2 years at 7+% plus someplace between 4 and 5 on headline inflation. I don't know how long it's going to take them, but even if you get to 2% at the end of the year after this, and that's an if, you've allowed a lot of embedded price pressures to arise. So
but they're going to let that. I mean,
well, that's just the inconsistency.
You don't need to hold them to their word. They're going to let that roll off their back like a water off
but here's
duck.
the problem, Matt. The thing that I have is a couple of things. One, this economy is actually doing reasonably well, all things considered, with the Fed having acted fairly aggressively. They're not aggressive, from my perspective. It took them a year to do one Volcker. The simple fact of the matter is we're at full employment. You have upward pressure on wages. You have a reasonable economy. Again, the data, although it is mixed periodically, seems to be showing the economy is actually picking up speed. I want to know why anybody outside of the equity market who needs rate cuts to justify silly valuations should think that an economy doing this well needs to have any rate adjustments. We're going to need to have something, in my perspective, that is significant, either some sort of catastrophic equity event or some really sharp deceleration in the economy and employment to justify this.
That's where I want to go. Michael Schumacher, our good friends at Goldman Sachs, are looking for a rate cut in the first one in the second quarter of next year.
And then one a quarter, right?
Yeah, so what do you think about that?
It seems quick. I think to Neil's point, something would have to break. Now, something in the neighborhood of one cut a quarter is not consistent with a disastrous event in the markets, but it's pretty clear to us the Fed really wants to stay on hold for a long time, at least Jay Powell does. And whether he wins that debate or not remains to be seen. But that does seem pretty fast to us. If you think about the typical time lag, for instance, I know there are perils in looking at historical cycles, but still, let's start there. Over the last 4 to 5 cycles, the average lag between the last hike and the first cut is something like 10 months. And if you consider the inflation scenario we've all experienced over the last couple of years, it seems to me it argues for a longer period, not shorter. So something would have to give pretty sharply for, let's say, early Q2 to be in the picture next year.
What do you think about Neil's supposition that we've seen the best of declining inflation and we could be in for higher inflation from here on out? I mean, we've heard a lot of other people say that as well. When you look at oil prices, airline tickets, healthcare costs, a lot of these things are only going up.
Yeah, whether it's higher or sticky, take your pick. I agree with Neil that basically the big winnings have already been cashed in, if you will. And our econ team, our economist Sarah House has a great term. She calls it the last mile, and that last mile is tough. So you've got core CPI, the run rate down to low 3s right now, but getting that to 2.5 or heaven forbid 2, that will be a very tough slog. So I'm on the same page as Neil here.
By the way, one point on that, everybody's looking at getting to 2. The question is that a stable rate? It's quite possible that we get down to 2 or near 2, and then all of a sudden it starts to rise. So just because the Fed manages to get closer, you're going to want them to maintain that and show it that it's actually a stable rate.
But so, Neil, do you think that the Fed could actually raise rates even further?
Well, it depends on the price pressures and employment. My view, Matt, and it's been this way for a while, is I'm less concerned about rates. 5%, 4.5%, 4, 6. They need to sell assets from their balance sheet. The balance sheet, I think, is a big piece of the problem. It's still providing, even though there's I call it quantitative dribble. It's slowly falling in size, but there are a lot of factors. By the way, one of the other things we haven't discussed, I mean, there is still enormous amounts of pent-up fiscal stimulus tied to some of the last programs that were passed by the Biden administration, which is also going to work against the economy slowing down. So the answer to me is they need to take some of the liquidity out of the market, and that's more important than the rates.
Hey, Michael, Jackson Hole next week. By the way, I'm still searching my inbox for my invite. I can't find it anywhere. I must have just missed it. But Jackson Hole, what do you expect to come out of there, if anything?
Usually it's a non-event. Now, last year was interesting, of course, with the famous 8-minute speech, and I'm going to head for the trails. But this year, I suspect the message is, hey, we've done a lot of good work. Inflation's down quite a bit. There's still a lot of residual benefit, lowering, whatever you might want to call it, from tightening in the pipeline. We're going to stay on hold for a long time. We're not going to cut anytime soon. And I think the market probably buys the first part of that talk and not the second part. So it's a really difficult sales job, if you will. One interesting point about Jackson Hole, though, is there's almost certainly no Q&A. So it's a set piece. Powell can stick to his message. Really no chance of being thrown off guard by a strange question. So in a sense, it's a fairly easy setup, but it's hard for, and consistently Jackson Hole hasn't mattered too much to the markets. It's hard for that to be radically different this year.
I would add one quick thing. Anything that sends the stock market up, provides liquidity, works against the Fed, in my perspective, going forward. So you've got that other counterbalance.
All right. Well, I'll keep looking for my invite to Jackson Hole. I got the surveillance jet all gassed up and ready to go, so we'll see if I can.
I think they're going without you, buddy.
I think they are. I think they are. That's the cold truth. Let's be honest. I offered to carry luggage, nothing. Michael Schumacher, head of macro strategy and rates for Wells Fargo, joining us. So we appreciate that, as well as our good friend Neil Grossman, former CIO at TKNG Capital. He comes in the studio, and he comes bearing gifts in the form of some lovely looking wine. I'm sure it's going to taste just great as well.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Issue of the day, the story that just kind of keeps on giving, that is former President Trump and his legal challenges, most recently from the state of Georgia. We want to bring in a couple of heavyweights, Matt. I don't know who put these two together. Tim O'Brien, senior executive editor with Bloomberg Opinion, and June Grasso, legal analyst with Bloomberg News. June, I'd like to start with you, just from the legal perspective. What is unique, or what's important for us to know about what the indictment from Georgia yesterday?
Well, I think, what's important is the scope of this indictment. And it goes, it shows the White House from the Oval Office to this rural county in Georgia. And it's very detailed. It, as you say, it sets out 161 separate acts that were done. And as opposed to Jack Smith's, the special counsel's January 6th, which was very narrow and targeted toward Trump and getting it to trial early, this one is really broad. It even includes things that happened in other states where there were fake elector plans. So you see this broad conspiracy to try to change the election, even including stealing election data. I mean, what you see in this is almost, some of it is just unbelievable. And then it goes to the heart of what we saw during the January 6th committee hearings, Ruby Freeman. Remember, everyone remembers that worker who was crying because she was harassed by people associated with Trump to say that the election was fraudulent. And one of the counts concerns her, and there are 3 people who allegedly harassed her who are charged as part of the defendants.
Tim O'Brien, this is the first time Donald Trump has ever been charged under RICO, right? Isn't that a little surprising when you say that out loud? But it's true. What's your reaction to this prosecution, to this indictment? Oh, we can't hear you. We can't hear Tim, guys. Can we get his audio? Are you muted?
There we go.
There he is.
There we go, Tim. Thanks.
Can you hear me now?
Yes.
You guys muted me. I'm back. I think on the RICO thing, one of the things that's just really interesting from sort of a historical perspective is, let's not forget that Rudy Giuliani, as a young prosecutor in the Southern District of New York, made his bones by pursuing RICO cases against the mob and against insider traders on Wall Street. And he essentially gave a lot of muscularity to federal RICO prosecutions. And now, decades later, that's the long arm of the law is revisiting itself on his doorstep in the same fashion. I think, this is, I think, like the 2 special counsel indictments, this is an evidence-rich prosecution or indictment. It is full of just raw evidence that I think would be very hard to refute in a courtroom in terms of how it's tied to the allegations of trying to torpedo the election. I mean, there's a taped phone call. He is taped saying, "Go and find me 11,000 votes." His minions, whether it's his lawyers or a chief of staff like Mark Meadows or people in the Justice Department, are all literally conspiring in an organized fashion to try to overturn election results when they knew that the results of the election and were repeatedly told that the results of the election were sound. So I think he's got a long hill to climb here as a defendant, and there is the possibility if he gets reelected that he can dismiss the 2 federal indictments and investigations that are circling around him now, but he won't be able to touch the Georgia case. So they're looking at a real legal problem.
Hey, Tim, you've known Donald Trump as well or better than anyone in the media, given your longtime dealings with him. How do you think he's going to react here? How is he going to play this whole thing out? How do you think he's going to...
It'll be televised.
It'll be televised in Georgia. But how do you think just all 4 of these indictments, what do you think his strategy is?
Well, his playbook has been to say it's a witch hunt, that it's entirely partisan, that there is nothing behind this other than an effort to knock out a robust competitor in the Republican Party. And of course, he's ignoring the need for the rule of law. He's ignoring the fact that the evidentiary trail is damning. He's overlooking the fact that it's happening in multiple venues. But he certainly has the ear of his core supporters, and he always will. I don't think there's a single indictment that can be brought against Donald Trump that will dislodge how warmly his core supporters feel about him. What the real political element of this is what moderate Republicans and independent voters think about this. That's where this will swing. But I think he's scared. For all of his bluster and this myth that he has 9 legal lives, he has never faced prosecutions that are this detailed and with prosecutors who have really done their homework and involve criminal charges, not civil shenanigans, in a courtroom where he's happy to wage the battle in the press as much as in court. And he's already been told by one judge in one of the federal cases that he can't go lollygagging around in the media trying to win the case there, or she's going to start to sanction him. So I think he's nervous.
To that point, Tim, I have a quote from Lewis Kaplan in another case, unrelated entirely, but I think it's interesting to read it out. So Kaplan says, in regards to Sam Bankman-Fried, a defendant's speech is not protected to the extent that it is intended to bring about a crime. And June, I want to ask you about this. What happens if Donald Trump is found to be attempting to tamper with witnesses? What happens if Donald Trump is trying to intimidate people with his speech? Can he always say that's political speech, free speech, and claim First Amendment? Or will any judge, have the power and the cojones to say, no, you can't do that?
Yes. There will be judges who will have the power to say no, and the judge in D.C. has already said no to that. So they're raising First Amendment claims, but First Amendment is about speech. And I think, as Tim referred to, what he's charged with is not what he said, it's what he did. And every conspiracy that's charged, the people talk about it, right? Speech is always part of a conspiracy. So that's a way for them to attack this, but I think it's almost the weakest way, and it's also something that plays in the public. So his supporters are saying he's a political candidate, he has the right to speak. Well, the judge in D.C. said, that's your day job. What you do in this courtroom, you're a defendant here, and your speech here is different, and you can't say anything you want. Now, she's testing him. He already, since that, she said, I'm going to be watching what you do, what you post on social media. He already, yesterday or the day before, said to the lieutenant governor that he shouldn't go, the lieutenant governor, Jeff Duncan, who testified at the grand jury and had testified at the investigative grand jury in Georgia, he said he shouldn't go to testify. So I'm wondering if the judge in D.C. is going to be looking at that and saying, intimidation of witness. Obviously, he's trying to intimidate a witness, intimidation of witnesses. And will she try in Sam Bankman-Fried's case, Judge Kaplan tried in different ways to curtail what he was doing, to curtail his outreach to different people there. So will she try in different ways? And another thing she said is, if this keeps up, I'm going to have the trial sooner than we thought because you're trying to taint the jury pool. So she has a lot of things that she could use against him. However, it is Donald Trump, and I don't think he's ever kept quiet about anything.
We have a listener writing in with a question, June. What if Trump's team moves to have this shifted to federal court?
I don't
How
think that
likely
will
is
work.
that?
I don't think that will work. I mean, he will try that. He also tried to get the judge changed in the case in Manhattan, but there is no real reason for him to be in federal court. And here you have a case that's all about Georgia law, which could be tried in federal court. But I don't see what the reason for him. It'll still be a jury.
Well, he might be able to pardon himself if he does that.
Right. Well, that's the reason why he wants to. But it'd still be state charges. That's interesting whether he still could pardon him. It's still a state case. I think that it would be rejected, and I think he'll probably try to appeal that. But what are his reasons for moving it to federal court? That he can't get a fair jury, which he's been trying to say all along?
Right.
So Florida's fine for him with the jury, but D.C.'s not.
Hey, Tim, you know what I've kind of noticed here during this whole process on the 4 indictments? I've not heard much from his family in terms of defending. What do you think the family dynamics are and the dynamics of some of his core supporters outside of some of the members of Congress, I guess?
Well, Eric Trump and Don Trump Jr. have been very vocal, I think, on their social media feeds and on news programs. I think Ivanka and Jared have headed for the hills. They are extremely conscious of how they're perceived socially, including in Manhattan, even though they've fled to Florida. So I think we're not hearing from them because they have their own self-interest in mind. But Eric and Don Jr. are still true believers and are saying the same things that their father is saying, that his free speech rights are being violated and that this is a witch hunt. I think, what's more interesting is the great silence from members of the party of law and order.
Agreed. Or support even, Tim. It's amazing how much support he gets from Congress and, I guess, silence from the senators.
Because he has enormous traction with about 30 to 35% of the party. And he has the ability to destroy GOP candidates who he has a distaste for. And I think this is essentially a moment, it's a profiles in courage moment. These are people who are more worried about getting elected again than they are about doing the right thing, even in the face of robust and damning evidence.
So, Tim, just real quick, 30 seconds left. I mean, how is this going to play out over the next months until we get till November of 24? I know it's probably an open-ended question, but boy, it seems to be one of the defining ones.
Well, I think it depends on how quickly these things go to trial. I think one of the reasons he's seeking to move the Georgia case to federal court is just for the delay. I agree with June that I don't think it'll happen, but if he can slow down the gears sufficiently till he potentially gets into the White House, he then would be in the enviable position of being able to dismiss both of the federal cases against him, telling the Justice Department to just drop it. He would still have to contend with the Georgia case. But I think what's really important about these things going to court is that there'll be a narrative presented to the public that the public can decide upon. And I think a lot of the polls and analysis of TV ratings around these indictments that have showed waning interest, the same was true of the January 6th investigations. And once those were televised and a public narrative was laid out, it really affected people's opinion.
All right, Tim, thanks so much for joining us. Tim O'Brien, Senior Executive Editor with Bloomberg Opinion, and June Grasso, Legal Analyst with Bloomberg News and the host of Bloomberg Law. Appreciate getting a couple of very smart voices there to help us kind of put some context around an evolving issue that will be with us presumably right up until the election and maybe past that.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Hawaiian Electric Industries under pressure, the stock there. Under concerns that perhaps there might be some connection between some of the utilities and that terrible fire in Hawaii. The stock is down 11% today, down 54% year to date. Let's get some more color and analysis on that. We do that with Andy Bischof, utility strategist at Morningstar. Andy, as you take a look at this situation in Hawaii, this terrible situation, what's your view of kind of Hawaiian Electric Industries? Because we don't know if the utility was the cause at all. Nothing's been proven. But what's your take here?
Yeah, good afternoon. Thanks for having me. As you mentioned, it's a very terrible situation and very unfortunate. As for Hawaiian Electric, there has been numerous reports of they may or may not have been responsible, or lines have been tied to the fire. And so what you're, I think, seeing is investors selling first and then asking questions later. Because as you had noted, that there has been no cause identified yet to date. But if Hawaiian is found to be negligent or would have provided a reasonable loss, then they could have a liability related to the fires in Maui.
So, I mean, even if they were found some way even partially responsible for setting the fire off, it's not their fault that we're in an El Nino, right? It's not their fault that we've had the hottest months on,
plus the hurricane
on record, and the wind. I mean, there's so many natural effects that certainly help to boost the destructive potential of this fire. I can't imagine they could be held liable to such an extent. What are your estimates?
Yeah, we don't put an estimate on it at this point, just given the kind of wide variation of potential damages and liability. People like to point to the other bankruptcy, PG&E, that had wildfire, but it's a different situation. They're held to a higher legal standard in Hawaii than they were in California. So under kind of the legal aspects, in Hawaii, they would have to could they have reasonably prevented a loss? And I think that's where the question is going to come up. There's been discussions of should they have preemptively shut the power off? They do that in some states. Whether that's reasonable or not in this situation, I think will definitely be up for debate in the court system. But it's not as clear-cut of a liability as you would have in California when you have in Hawaii.
Andy, give us a sense of kind of the financial health of this company, Hawaiian Electric Industries, in terms of balance sheet, liquidity, that kind of thing.
Yeah, I mean, up until last week, there was zero concerns of the financial health of both the utility, and they also have a bank subsidiary. Absent what happened last week, they were looking at a few headwinds from the bank. So they were going to look in at roughly $2 per share, good cash flow to support their dividend. But now, as we kind of head into this new era, it's really going to be a question of their capacity to access the markets to fund these capital requirements going into both to repair the necessary infrastructure in Maui and kind of their capital going forward.
We did see that the credit rating was cut to junk by S&P. How much of a problem is that ratings cut for the company, regardless of the outcome of the investigation into the fire.
I mean, every healthy utility needs access to the credit markets, and all utilities like to have that investment grade credit rating, and that's going to be very important, not just for Hawaiian, but for all utilities. Utilities have significant capital programs in place. For example, Hawaiian Electric is looking at transitioning to renewable energy. So that's going to take a lot of capital. And that also funds not just your maintenance expenditures, but your growth capital expenditures. And so that's going to be very vital for Hawaiian to have access to the capital markets going forward.
So, Andy, have we heard anything from the company, or do we expect to hear, or when do we expect to hear anything from the company?
We haven't heard anything, official that basically that the cause is under investigation. That investigation could take weeks or months. So that creates a lot of uncertainty for investors, and that uncertainty is not something that your typical utility investor likes to have. But I would expect that this is going to take months, if not years, for it to work through to provide clarity for the underlying investors in Hawaiian Electric.
So, just talk to us about this management team here and this company. Is this a company and a management team that's considered or well regarded by investors? Is this a utility that's considered to be a quality utility, or maybe it's one that maybe cuts costs, cuts corners?
No, I don't think that's fair. I mean, I think it's a solid management team. They've promoted within. They have a new CEO that just came in recently from the long tenured CEO previously. I think they run the company with providing reliable electricity to the citizens of Hawaii. And there's zero indication from me to see that they were cutting any cost in any respect. The utility's number one job with regulators is to provide power, reliable power to its citizens, and regulators oversee that.
So, Andy, not maybe just aside from Hawaiian Electric, more generally speaking about utilities, how do utilities, I mean, with all the climate change issues and all the extreme weather that we seem to be experiencing over the last couple of decades, whether it's fires in California or hurricanes, how do utilities typically, I don't know, do they insure against that? What is the reliability there?
There's definitely some insurance, but take a hurricane, for example, in Florida. If there's damage to the infrastructure, a utility should recover all reasonable costs to get the grid back up and performing and providing electricity to its customers. You bring up clean energy. That's going to be a significant expense for utilities going forward, capital investment opportunity. But as we look forward and incorporate some of these significant weather events that you mentioned, utilities are going to have to continue to plan and harden their infrastructure to be able to adapt to these significant weather events and get up in a reasonable time to provide electricity.
So, Andy, I'm just looking at the S&P Utilities Index, off about 10.5% this year to date, and over the prior 52 weeks off about 17.5%. What's been the narrative around utilities these days?
Yeah, last year it was a great year for utilities. They outperformed the S&P, and that's switched this year.
Yep.
Two significant risks for utilities are higher interest rates and higher inflation, and you have both of those right now for utilities, to where we actually think utilities are a bit undervalued. But going forward, you really have to have strong confidence in the underlying growth, and that management team can really contain costs so they can be able to support that growth without having significant cost increases to its end customers, making sure of affordability for customers.
I wonder if the distance from the capital markets demands any kind of risk premium. What do you think about that? I just was reading that the company Hawaiian Electric Industries was started in 1891. A decade after King Kalakaua met Thomas Edison to see the incandescent light bulb, which is fascinating. But if you read a history of these Hawaiian kings, they traveled so far, and it took them so long, obviously, because of their remoteness. Does the distance of Hawaiian Electric or any of these companies from the capital markets demand a risk premium?
I don't think so. Hawaiian Electric obviously is probably the furthest way you can get for a U.S. utility from the capital markets, but there's been no indication for me that distance is a relative risk factor for utilities.
Hey, Andy, thanks so much for joining us. Appreciate getting your thoughts there. Andy Bischof, he's a utility strategist at Morningstar. Again, Hawaiian Electric stock under pressure. Investors obviously concerned about potential liability there, although no cause of this fire has been determined at all. And
S&P cut them to junk.
Saw that, yep. So kind of getting out before, so we'll have to see how that plays out.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.